Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Danny Akuye.
And I'm Andrew Gagan. Yeah, good to be with you on this Monday afternoon. And well, Danny, we started really well and then we sort of faded and let's call it a flat finish,
yeah,
shall we?
It does look like a flat finish. We might just check out and see where the market is. Well, there you go, Gags, exactly right. It's not even a point up, and the ASX 200 does look like it's squeaked out 2.2 points. So market really paddling on hold, but Andrew, there's so much going on underneath the surface.
There's a lot of news, and of course, that takes us to our themes. In fact, takeover tally. You've labelled it very true. A lot of movement going in the M&A space.
Yeah, it's crazy. So Alcoa bidding for Illumina today. Superloop being taken over by Aussie Broadband. There are also rumours that Megaport may actually come into play at some stage as well. And of course, we've lost Altium. We're losing CSR.
There's going to be nothing left on the local
bourse. What are we going to talk about at this rate?
Interesting. In fact, I caught up with Ben Yeo from More Australia. We were talking about this, and he says, look, given where the Aussie dollar is at the moment, those foreign buyers looking at Australia thinking, yeah, I'll take that, thanks very much.
Absolutely, and it really has been quite prolific, so maybe we could be expecting more. But also these retailers, we call it the retailer rumble, but when I say rumble, I mean rumble in a good way, because although some of these sales numbers, Andrew, have been not great, the point is that they're not as bad as expected. So Adairs and Kogan today, share prices rallying really hard off those results.
Yeah, Kogan is an interesting one because it's been under extreme pressure. It hasn't really recovered at all since COVID. But online retailers making a bit of a turnaround play at the moment.
Absolutely, and we saw that as well with Temple and Webster. But it's a bit naughty saying the next one, Bourse Ball Breakers, but I couldn't help myself because we have RBNZ on Wednesday, we've got our CPI, we've got US PCE, we've got Japanese CPI tomorrow. Andrew, we have so much going on the macro front, and you never know. Might trip the markets up.
Well, indeed. In fact, I was listening to your interview with Chris Weston this morning talking about the importance of that RBNZ move where they could actually hike.
Yeah, and that would obviously probably put the cat amongst the pigeons, to put it mildly, because RBNZ was one of the first central banks to move. And really the rate hiking cycle, for all intents purposes across the globe, is perceived as having stopped. Anyway, we'll have to wait until Wednesday for that. But let's have a look at some of the sectors and see how they were performing today.
Yeah, among them the utilities and, well, in fact, let's start with energy, shall we? Look, we did see I think the oil price actually came off. It was at a 3-week low, in fact, I think, where we're at, and it's obviously reflected in some of the bigger producers locally. Absolutely,
and the utilities, what was happening there today? AGL and Mercury NZ were up, otherwise everything else was in the red. Did you know, Andrew, I was doing some stats, Origin is one of the top performing stocks in the ASX top 100 since the October lows. Really? Who would have thunk it?
No,
exactly.
And elsewhere, the consumer discretionary, which has been talking about those retailers there. US Farmers has been doing well since it reported last week.
Yeah, that's been on a tear, hasn't it? And it's gone ex-divvy, I think.
Yeah, and we've got, I think, Harvey Norman's coming up in terms of its earnings results, isn't it? And we already had JB Hi-Fi, but we've just mentioned a number of those other retailers that have been reporting today at the same time.
Yeah, it was also worth noting Lovsia was very strong again today, so that might be the smell
love for Lovsia.
The love for Lovsia. It mightn't all be Tay-Tay. It might have something to do with those shorters still trying to cover their positions. The bling bling. Now let's have a look at some of the top stories. And Adairs has flagged a challenging sales environment for the first 8 weeks of the second half, though expects the group's comparative sales performance will improve across the second half of fiscal 2024.
Pubs and alcohol retail Endeavour, first half net profit coming in about 4% lower, while revenue was higher with a 14.3 share dividend.
And the Reject Shop, first half net profit down 11% on higher revenue and a 10-cent per share dividend declared.
Across the other side of the mall, the Shaver Shop, half year net profit slipping 9%, revenue also lower, tipping third quarter gross profit. Margins will remain in line with its FY23 period.
And at the smaller end of town, a Nanosonics, half-year profit coming in just over $6 million, down from $10 million in the previous period. Now let's get to our guest on a Monday afternoon, of course. It is Josh Gilbert from eToro. Josh, how are you?
Good, guys. How are you?
Good, good, good. It's a really big week, potentially, isn't it, Josh? We've got a few macro potential events, one being the Aussie CPI. What are you thinking around that?
Yeah, like you say, I think you mentioned a minute ago there that, we have got quite a lot of macro events that could potentially, trip this market up in terms of, where we are at the moment, because we've had such a good run to sort of start the year. Markets have maybe, got a little bit carried away with the sort of the AI mania, obviously led by what was Nvidia sort of last week. And then obviously locally, we do have that CPI print this week. I think expectations are for it to sort of pick up slightly from that sort of January reading. I think markets are looking for about 3.5% from January's 3.4% as well. And I think that will sort of snap what has been a streak of sort of continuous easing as well. So this is probably going to be one of the main sort of data points that the RBA is going to have before obviously they meet, in a couple of weeks. We've got Q4 GDP as well, which would also be pretty important as well. But I think ever since we've had the data in sort of recent weeks, ever since we've sort of had markets sort of moving towards record highs, those rate cut expectations have been sort of pulled back slightly. We're now sort of maybe looking at a cut not fully priced in till September. For a while there, it was looking like August, and we had sort of 3 cuts almost priced in for the year. So I think this inflation reading this week is going to be sort of really important. It remains the most important number in markets. It's going to be really key. Obviously, I think, another positive that we probably had for the RBA last week was that sort of wage data. Yes, it was sort of rising, but it's probably likely to mean that we've sort of seen that peak there as well. So, I think that inflation number is going to be what investors focus on locally this week, especially as reporting season sort of dials down.
Josh, I mean, you've followed the US market really closely. Given the AI mania we've seen, obviously led by Nvidia, do you think that is justified, or do investors perhaps rightfully a little bit nervous about where market's heading at the moment?
Yeah, look, I think the about Nvidia, and I think we've seen a lot of comparisons in the last sort of couple of weeks around sort of the tech boom in 2000, Nvidia being compared to the likes of Cisco. The difference here really is that we're seeing real earnings growth from Nvidia, which is ultimately warranting sort of the move that we've seen. Earnings up by sort of 500%. Within the last year, we've seen revenue more than sort of triple. So they are delivering the sort of the numbers, which I think is really important. Maybe though we are, as I say, getting a little bit worked up around this sort of, idea of AI. Maybe we're seeing some companies' valuations boosted higher on the viewpoint that AI will deliver. But I think for Nvidia in particular, is the difference there is that they are actually delivering right here and now. And I think that goes for, the other sort of big tech names as well. They are delivering that. I think there's a bit of worry there maybe for those other companies that aren't sort of starting to monetize AI just yet. But Nvidia is ultimately, I think, warranting their sort of recent move higher with that sort of earnings growth. And that's not something that we've seen from a company of that size for a long time. I think when after they reported earnings, it was the biggest market cap move that we've ever seen from a company in history. So for them to do it on this scale, I just think is magnificent, and that is why they are part of that 7.
Yeah. Indeed, it is magnificent. It's really interesting because the valuation hasn't actually increased that much. It's quite phenomenal. But let's move back home, Josh, where it's not always quite as exciting as having an Nvidia. We do have a Lovsia though, which has been on fire. What about Coles? Because Woolies has been a bit of, those staples have been under such political pressure, but also too maybe margins as well. What about the Coles results? Any views on those?
Yeah, I think you mentioned sort of Woolies there, and I think Coles as well has also sort of been in the limelight as well. And I think it's been a really tough period for any businesses that have been in the limelight. I think Qantas is another one, pretty poor earnings, in the end last week. Obviously got a new CEO sort of trying to really sort of turn the ship around, but any of those sort of businesses that are under sort of pressure right now are, being hit, in terms of value on their share price. And Woolworths, I think, changing CEO was probably coming at the right time. It will probably seem to be a bit of a timely pivot. So I think, Coles is probably going to be the one that I think sort of stands out this week. We're also expected to sort of see declining profits, just like we saw with Woolworths as well. But we are set to see, revenue pick up. It's set to be the fastest pace for revenue for sort of almost 3 years as well. And I think that may be a slight silver lining there, especially after coming under sort of quite a lot of pressure as well. It will be good to sort of try and get some commentary as well around, that sort of PR nightmare that we're sort of seeing for these from these sort of consumer staple names at the moment, such as Coles and Woolworths, to sort of see, how they're going to sort of deal with these accusations of price gouging, et cetera, as well. So again, focus is going to be on sort of net income. Focus is going to be on those margins, how it's sort of holding up in this environment as well. Are they passing those costs on to consumers? If they are, going to be great for shareholders, but also not going to be very good for those sort of thoughts of price gouging as well. So either way, I think it's going to be a really interesting result this week.
And Josh, you mentioned Qantas. How are you looking at those travel-related stocks at the moment with Flight Centre to report? I guess you could argue there's a lack of competition in that sector, particularly as far as airlines are concerned, of course. But in terms of those,
we're getting a new one, Andrew.
A new airline?
Yeah, I think we are. It's an article that's just popped. Turkish Airlines is coming to Australia.
You don't want to enter into the Australian market. Look at the history of failures that we've had with this.
So as they don't fall out of the sky.
Well, what's happened to Bonza?
Sorry.
Where's that gone?
Bonza.
Sorry, Josh, we're getting sidetracked here. So what are you looking at, particularly those travel stocks at the moment?
Yeah, I think it's a great point in terms of like a new airline coming in, and the issue that these airlines are having at the moment is that we've gone from seeing sky high prices on airfares to them sort of really coming down. So that Qantas result last week is mainly because we're starting to see airfares coming from sort of down from record highs, and that is really the trouble when you sort of owning these types of businesses, is that it's really difficult to sort of pass on to consumers and to continue passing on those costs to consumers, because you are going to have competition coming in, and ultimately you're not going to be able to sort of keep those fares as high as you sort of would like, and maybe in sort of other businesses as well. Flight Centre, though, is maybe going to be slightly different to what we see from the airliners. I think their profits are actually set to sort of rise compared to what we've seen from the likes of Qantas. They've been sort of coming back from the pandemic slightly slower than what we saw from the likes of some of those other travel names. So they're actually set to see some strong numbers there as well. And they actually had a good result at the end of sort of fiscal year 23 as well. Revenue was up about 126%, and we're expected to, as I say, sort of see that continue, because travel demand is still high, but as I say, airfares are beginning to sort of normalize as well. So I think that's going to be really important for any of those travel businesses to sort of really see if that travel demand does continue as we sort of go through what is still a really tough period, with inflation still pretty elevated, and you've also got interest rates near those decade highs still. So we're going to continue to see consumers come under pressure, and if they're going to be willing to spend thousands of dollars to travel internationally, because that's really where these sort of travel companies make their money, is on those sort of international trips. So it's going to be really interesting to see, but I think that Flight Centre should fare slightly better than what we've seen from some of these other travel names so far.
Fantastic. Josh, as always, thank you so much for joining us on a Monday afternoon.
It's a pleasure. Have a great week, guys.
See you, mate. All right, well, let's come back to our stock of the day then, and it was Kogan. Let's get across what our experts thought. Nathan Somerson-Naran from Deep Data Analytics and Mark Moreland from Team Invest.
Sheik used to be every man's darling.
Yeah.
Every small cap fund manager had it.
Yep.
Now you couldn't, find a friend. So in that context, things can turn on you. It is cyclical. So just be careful. Kogan is not your tier one retailer. So I'm not chasing that.
Right.
The good retailers, JB Hi-Fi, Nick Scali and so on, who all of them
maintained earnings all the way through post-COVID, and we put a lot of value on stability, because stability shows that management's in control and knows what they're doing. When you have these big drops where you go from being profitable to a massive loss and then come back again, it's like, well, what's going on with that? I mean, at least with a mining company and who are commodity price takers and so on, you can blame the commodities. That's fair enough, but not a retailer. So we wouldn't touch Kogan. It's very much a B grade operation from our point of view.
Well, knock me down with a feather. Mark Mullins and Team Invest not touching Kogan.
What a surprise. Anyway, let's move on. Our annual subscriber survey is open until March the 11th. And basically, we'd really love if you could take a few minutes and fill it out so we can make ausbiz better for you.
Yeah, and it's worthwhile doing so because, in fact, we're going to lob an investment portfolio from MPC Markets your way. Well, look, someone's going to win that, worth $5,000, other prizes as well. So head to ausbiz.co/survey24.
Does that count? Do we count?
No. Employees not eligible. Good try though. You go under a pseudonym.
What a shame. Okay, jokes aside. Okay, what a great deal. Now let's have a look at some of today's market leaders and some of those lithium plays.
They're on a tear today, aren't they?
Do we know why?
Well, because they've fallen so far, and finally investors thought, hey, you know what, there might be some value here.
Okay, Liontown leading the pack. Pilbara Minerals also up strongly. Alumina, a bid lobbed from Alcoa. Look at Lovsia, as I keep on saying, I can smell the burning rubber from those shorts, up 7%. And Tabcorp, not their shorts literally, not their step ones. Tabcorp up 6.5%.
Well, that's right, pants on fire, Danny. All right, let's go to the laggards then. Nanosonics off the back of its result. Well, likewise also with TPG Telecom. Investors a little wary about what is ahead. Insurers were interesting. We saw Suncorp outperform, NIB sort of not impressing the market at all, and obviously some of those energy producers also under pressure. Yeah,
and let's have a look at the small caps, see what's happening there. 29 Metals up 30%, Big Tin Can up 21%. Superloop, interesting, of course, another takeover offer lobbed their way, up almost 16%. In Main Pharma, I haven't seen that for a while, up almost 14%. And going in the other direction, Nexted. In fact, that's a huge fall today that we've seen there. Also some elsewhere in the resources space, and Ventura Health also tumbling as well. And I spoke experience codes there, but I actually just spoke to the CEO earlier, so catch that interview. Well, speaking of travel-related stocks. Yeah, absolutely. Now, let's check and see if anything is happening overnight. So we've got the MPC, that's Great Britain, member Pill speaks. Yeah, BOE. Oh, Bank of England. Okay, yes. I'm being very silly. Member Breeden is also speaking from the Bank of England, and we've got US new home sales. All right, and locally, reporting season continue, of course. We were just talking about coals there with Josh, so that's certainly one to keep an eye on. Alumina, given it is now the focus of that takeover deal from Alcoa. And John's Ling Group has certainly been one of the favourites among many of our fundies that we've spoken to, actually, so that'll be interesting as well. Yeah, and Altium is reporting, but it doesn't really matter because they're going to be taken over. Let's have a final check on the market for this Monday, the 26th of February. There we can see the SIBO. Pretty flat, Andrew, isn't it? Just squeaked out a little bit of green on screen. But the ASX 200, hey, it's up 9 points. That's very exciting. Or just over a tenth. It's all about momentum, Danny. We began the week positively. Let's call it at that. We have. Anyway, that is it for us today from the COB. But of course, we will be back bright and early, 9:45 tomorrow morning. Yep. With the Global View. See you then. Bye.